I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. The last 2 weeks' equity market moves show perfectly the markets rarely move in a straight line, and it is best not to make knee-jerk decisions. Following recent weakness due to Donald Trump's Mexico tariffs, it was the Fed that took centre stage last week as the prospect of an interest rate cut helped global equity markets recover lost ground. James Bullard, the St. Louis Fed president, was the initial bullish driver with a statement that US interest rate cuts may soon be needed to boost inflation and counter the slowing economic growth caused by escalating trade tensions. Then the Fed Vice Chair, Richard Clarida, stated that if policymakers sense growth is slowing, they will act appropriately. Now, we have been saying for some time that the US needs lower interest rates, and these comments suggest that the Fed are now open to an interest rate cut, which would be a powerful impetus for last week's rally to continue. The big decision now is, will the Fed move as soon as their next meeting on the 18th to 19th of June, or will they prepare the ground in that meeting for a cut at their July meeting? However, adding to the urgency for an interest rate cut was Friday's US employment data. Payrolls increased by just 75,000, consensus estimates were for a gain of 175,000, while last month's gain was revised down to 224,000 from 263,000, and average hourly earnings growth slowed to 3.1% from 3.2%. Likewise, there is a case for a dovish tilt in Europe after last Tuesday's Eurozone CPI inflation slowed. Headline CPI inflation dropped to 1.2% from 1.7%, and the core rate, which excludes volatile items such as food and energy, fell to 0.8% from 1.3%. However, Thursday's ECB monetary policy meeting wasn't as dovish as we were hoping, as policymakers didn't cut interest rates or add stimulus, although Mario Draghi, the ECB president, was adamant that they would not shy away from action to support the Eurozone economy, and admitted several policymakers raised the possibility of an interest rate cut or restarting QE. Now, that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.